The digital asset world, it really is a whirlwind, isn't it? Always moving, always something surprising popping up.
Absolutely. Never a dull moment.
So today, on the deep dive, we've sifted through a whole stack of sources. We're aiming to cut through all that noise.
Get to the core of it.
Exactly. Deliver those, essential nuggets of knowledge that are really shaping the crypto landscape right now. We want to give you a clear read on the market's pulse.
Big moves being made.
And yeah, those underlying currents, what's actually driving things.
That's right. We're going to map things out, starting with specific market conditions like Bitcoin's consolidation right now. Why is it doing that?
And then pivot to strategy.
Yeah, look at a key player like Ripple, their moves, and this potential breakout scenario for XRP.
Okay, and it doesn't stop there. We'll also dive into something pretty new. This frontier of tokenized stocks could be a game changer for investment access.
Definitely fascinating stuff there.
And then we'll zoom out, look at the bigger picture politics, some interesting DAO controversies, and the always critical security issues.
It's a packed agenda.
It is. So let's get right into it.
Okay, so Bitcoin. Right now, the main insight, I think, is that it's in this sort of deep market reset phase. It's digesting things, not necessarily, crashing.
A reset. Okay, so it's consolidating.
Exactly. It's consolidating within what analysts call a descending channel, basically trending downwards, but within a defined range, hovering near that key support around $104,000.
Okay, you mentioned on-chain activity is weak, profitability fading. If things are cooling down there, what does that really mean for the market mood? Are we seeing that reflected elsewhere, maybe derivatives?
Spot on. Those are clear signs of the reset. Weak momentum on chain, profits down, fewer people jumping in. And yeah, you absolutely see this lack of speculative urgency in the derivatives market too.
How so?
Well, we saw this rare thing called a dual-sided flush recently. That's when both the bulls and the bears get wiped out simultaneously.
Ouch. Both sides.
Yeah. $28.6 million in longs and $25.2 million in shorts liquidated in just 24 hours.
Wow. That's a serious shakeout.
Yeah.
What does an event like that do to, the overall leverage in the market?
It's a pretty clear signal, right? It cleans house, speculative leverage gets flushed out. We saw BTC-denominated open interest, that's the total value of outstanding contracts, drop about 7%.
Okay.
Went from 360,000 down to 334,000 BTC. So from a technical angle, yeah, Bitcoin struggled to break past $109,000. It's in that downward channel.
But there's a support zone people are watching.
Right. Analysts are eyeing that critical zone, roughly $103,400 to $104,600. It's significant because you have a few things lining up there. There's a daily fair value gap, basically a price inefficiency markets often revisit, and the 200-day exponential moving average. Both suggest it could be a point for a bounce.
Lots of technicals suggesting the market's kind of holding its breath.
Yeah.
But then you look at the bigger economic picture. Bitcoin seems to be facing some pretty serious macro headwinds, doesn't it?
Absolutely. You can't ignore the macro context. That recent inflation data is key.
The PCE numbers.
Yeah, core PCE climbed to 2.7%, a bit hotter than the 2.6% expected. And PCE itself rose to 2.3%. What's really important is that this is the first uptick since February 2025. Inflation's proving sticky.
Which means the Fed
is less likely to cut rates anytime soon. Right. They'll probably maintain the pause, keep financial conditions tight. And that's generally not great for risk assets, including Bitcoin.
Makes sense.
And you see that lack of speculative urgency in other data, too. Spot volume only saw a minor $7.7 billion increase in Q2, and transfer volume actually dropped 36% earlier in the quarter. People aren't rushing in.
Okay, so while Bitcoin's sort of grappling with this consolidation and these headwinds, there's another big name, XRP, telling a potentially very different story. It's been stuck for a while, but now there's talk of a breakout.
Yeah.
What are the catalysts here?
Yeah, XRP has been in that $2 to $2.60 range since early March, kind of stagnant, but now several things are lining up. A key factor is Ripple's strategic acquisitions.
Like Hidden Road.
Exactly. They just bought prime brokerage Hidden Road for $1.25 billion. Now, a prime brokerage, for anyone unfamiliar, provides high-level services, trading, custody financing, mainly for institutional clients.
So this signals a serious institutional play by Ripple.
It really reinforces that ambition, yeah. Especially because their new stablecoin, RLUSD, is apparently going to be used as collateral on Hidden Road's platform. And Ripple's CTO, David Schwartz, even mentioned multiple potential acquisitions are in the works, pointing to past buys like Mataco and Standard Custody. They're building out their infrastructure.
And it's not just buying companies, right? They're also upgrading the actual XRP ledger.
Correct. They're planning significant upgrades, more programmability, a new lending protocol. Plus, there's this new partnership with Wormhole.
For interoperability.
Yeah, expanding multi-chain interoperability on the XRPL and its upcoming EVM sidechain. That basically means making it compatible with Ethereum's system. These moves, they do feel a bit like Ethereum's early evolution, could really boost XRP demand for things like cross-border payments and DeFi.
Interesting parallel. So how is this translating into actual institutional interest? Are people trading this stuff?
Well, that's the important question, right? Will demand follow? The early signs from the CME XRP futures are quite positive. They launched May 19th, already clocked over $542.8 million in notional trading volume in the first month. That suggests pretty robust interest, both institutional and retail. Nearly half the participants were from outside the U.S., too. It's significant early adoption.
That is robust for month one. And then there's the elephant in the room, the spot XRP ETF. Betting odds are high, like 76% on Polymarket for approval by year-end.
Right. And ETF approval, as we know, could potentially open the floodgates for significant capital from traditional finance.
So strategy, institutional interest. What about the charts? What are the technicals saying?
Well, this brings us to the technical analysis, which is looking pretty bullish, actually. One analyst, X-Force Global, suggested the recent dip to $1.90 might have just set the stage for a faster bullish route. It was a retest of the Pew .618 Fibonacci level.
A key technical point.
Yeah, often acts as support. Then you have things like Elliott wave analysis projecting a possible breakout towards $5, maybe even cycle targets way up between $20 and $30.
$20 or $30. Wow.
Yeah, ambitious targets. Another analyst, Igrag Crypto, sees $8 to $27. They also noted a breakout from a pennant pattern that's a chart formation could potentially lead to $14.
Which would be a massive increase.
564% increase from current levels, yeah. The key hurdle everyone's watching seems to be around $2.65. Getting past that could trigger a bigger rally towards $3 and maybe beyond.
Okay, fascinating. So from market mechanics to potential surges, let's shift gears again. We're moving to an innovation that might fundamentally change how everyday folks interact with markets. Tokenized stocks.
Right. Gemini just launched one for EU users, a tokenized version of Michael Saylor's strategy stock, MSTR. Lets you invest in a Bitcoin proxy company directly on-chain.
What's the core problem this is trying to solve? Why tokenized stocks?
Well, a key observation is that traditional financial plumbing, the rails, are often seen as hard to access and in need of modernization.
Meaning?
Think about it. Trading hours limited by exchanges, higher fees for international trades. Sometimes you just can't access certain stocks depending on where you live. Real friction points.
So tokenization promises a frictionless experience? Sounds good, but are there hurdles? Regulatory issues, maybe?
Well, the promise is compelling, yes. Greater access, fewer restrictions, potentially better liquidity, more transparency. Plus, holding crypto and stocks together on-chain without needing to sell one to buy the other.
That is convenient.
Yeah. And Gemini's partnered with a U.S. securities provider, Denari, for a tokenization on demand model, so they can potentially spin up new tokenized assets quickly. Right now, it's just MSTR, but they say more stocks and ETFs are coming in the coming days.
But the regulatory side?
Yeah.
Still developing?
That's definitely a hurdle, yes.
Yeah.
The regulatory landscape is still catching up, but the potential benefits seem to be pushing this forward.
And is it just Gemini, or are other big players looking at this too?
Oh, absolutely. You're seeing names like Robinhood and Kraken exploring plans to offer tokenized U.S. securities to their non-U.S. customers. Coinbase is even trying to get SEC approval for tokenized equities within the U.S.
So potentially a huge market.
SDOCar's CEO, Arnab Naskar, thinks so. He projected it could become a bigger trillion-dollar market, bridging TradFi and blockchain. And just briefly on MSTR itself, the stock's up nearly 4% over 30 days, trading around $384. One analyst even thinks it has a good shot at S&P 500 inclusion if Bitcoin stays above $95,240 by the end of Q2.
Interesting. Okay, let's pull back now, look at some broader cryptocurrencies. Starting with politics. U.S. President Donald Trump was recently asked about his family's crypto holdings.
Right. Specifically, if he'd divest to ease political pressure on digital asset legislation.
And his response.
Well, what's interesting is how he framed it. He sidestepped the personal question and focused on the bigger picture. He emphasized the U.S. needs the crypto industry to prevent competitors like China from dominating.
A strategic argument.
Exactly. He said, quite clearly, the industry's power is much more important than anything that we invest in. So, framing it as national interest over personal finance. We're just reporting what was said there, of course.
Understood. Okay, moving from geopolitics to Internal governance issues. There's this controversy brewing around a DAO, a cross-protocol. Allegations of misused funds.
Yes, specifically accusations against the founders. An anonymous on-chain researcher called Ogle claimed $23 million was siphoned from the protocol to the founders' for-profit company, Risk Labs.
What's the other side saying? This touches on tricky DAO governance questions, doesn't it?
It really does highlight the ongoing debates about transparency and structure in DAOs. Hart Lambert, who founded both Across Protocol and Risk Labs, has denied the claims.
No.
He stated Risk Labs is actually a Cayman Islands-based nonprofit foundation company with fiduciary duties. However, and this is where it gets complex, legal experts point out that these Cayman foundation companies can actually have commercial purposes, not just charitable or private ones.
So the legal structure itself is part of the debate.
Precisely. That distinction and the legal framework is really at the heart of this whole controversy.
Okay. And finally, let's touch on something quite alarming, crypto security. The first half of 2025, the losses have been staggering.
They really have. $2.1 billion lost to attacks already. That's already about 10% higher than the entire record year of 2022, and it nearly matches all the losses from 2024. It's a huge concentration of attacks.
Just shocking numbers. How are these happening? What are the main attack methods?
Well, if you break it down, the vast majority, 80%, comes from what are called infrastructure attacks. Think private wallet keys getting stolen, front-end websites being compromised.
The basic plumbing.
Kind of, yeah. Then about 12% comes from protocol exploits, things like flash loan attacks or re-entrancy attacks, which are more sophisticated ways to manipulate the smart contracts themselves.
And wasn't there one massive incident that skewed the numbers?
Yes, the elephant in the room is the $1.5 billion Bybit hack back in February. That single event accounts for nearly 70% of the total losses this year so far, and it's been linked to North Korea.
Wow, $1.5 billion in one hack. That's almost like something out of a digital heist movie, isn't it?
It really is. It's a sobering figure.
Beyond just the sheer amount, what's the biggest takeaway from these kinds of infrastructure attacks dominating the losses?
I think it's a stark reminder, really. As the tech evolves, the threats evolve alongside it. The biggest lesson is just the absolute critical need for robust security at every single level. Meaning individual users protecting their keys, platforms having rock-solid architecture, and crucially, that multifaceted collaboration. The experts are calling for law enforcement, financial intelligence units, blockchain analysts, all working together globally to track and stop these actors.
It takes a village, digitally speaking.
You could say, yeah.
Well, we've certainly covered a lot of ground today, from market consolidation and potential breakouts to these really groundbreaking ideas like tokenization.
And then facing the hard realities of regulation, governance debates, and these massive security challenges.
It really shows the varied landscape, doesn't it?
Right. Indeed. And maybe it leaves you with this thought to chew on. As this crypto world keeps maturing, keeps integrating more with traditional finance, how does that play out?
The push and pull.
Exactly. How does this growing demand for access and innovation, like we see with tokenized stocks, balance against these persistent security threats? And the whole complex dance of politics and regulation. What new opportunities and what new risks are going to bubble up from all this ongoing friction and evolution?
Something to definitely keep watching.